Happy New Year and welcome to another S&P 500 analysis. Today is January 1st, 2023. 2022 has been one heck of a year. We saw the market put in an all-time high. Inflation hit a 40-plus years high, and the Fed went from calling inflation to be transitory to say it will do whatever it takes to bring inflation back down to 2%. And it put its foot to the pedal and hiked interest rate from near zero level to 4.25% in a span of 9 months. That included 4 consecutive 75 basis point increase. And the S&P 500 had one of the worst years since 2008 after seeing companies' market cap double, triple, some even quadruple just in a span of 2 years. And Apple market cap went over $2 trillion. And Tesla went over $1 trillion at the height of this euphoric cycle in the market. Now, as we watch the S&P 500 along with the other major market indexes pulling back, and as the Fed continue to raise rate, attempting to bring in inflation, what could we expect the S&P 500 will do in 2023? As you know, the market is an unpredictable entity. When one tries to correlate some economic events to the behavior of the market, one will eventually be surprised by the disconnect from what used to be correlated. The major reason for these disconnects is human emotions. Our behaviors usually are very predictable until we reach a point of despair or disbelief. Then our behaviors will be abnormal, and that's what caused the disconnect in the market. After all, the market is made up of people with 2 major emotions, fear and greed. And since the result of these emotions are reflected in the price of this financial instrument, it is for that reason we pay attention to price action to get some clues on what the market might do. Now, let me emphasize the word might. We can only hypothesize what the market might do. We cannot predict what the market will do, as no one has a crystal ball to look into the future. So in order for us to see what might lies ahead for the market in 2023, we will look at the market sentiment to see how the market participants are feeling about the market, and we'll look at the market internals to gauge the strength and weakness of the market, and we will look at the price action to see where it might be headed. Since 2022 has ended, I will post a separate video during the week to review the S&P 500 sector's performance and their outlook. In addition, I will also post an update on the FANG Plus stock in my Substack channel, and the link is smtraderCA.substack.com. Here's a yearly chart of the S&P 500. For 2022, it lost 19.44% or 926 points. It is one of the worst years since 2008 when it lost 38.49% or 565 points. The most recent negative year before 2022 was 2018, where it lost 6.24% or 166 points. And here is the 2022 performance for the indexes. The S&P 500 lost 19% or so, and the NASDAQ 33%, and the Russell 2000 a little bit over 21%. And the Dow Jones was the best performer. It only lost under 9%. And then we have the Dow Jones Transportation. It lost 18%. And the New York Stock Exchange Composite Index lost a little bit over 11%. On this weekly chart of the S&P 500, we see the range for the week was smaller than usual, and that's probably due to the shortened week because of Christmas holiday. The S&P 500 had a range of 77.41 points, and remarkably, it only lost 5.32 points or 0.14%, primarily due to a 1% rally into the last hour of trading for 2022. Where the S&P 500 had a 34-point rally into the close on Friday. Now, for the week, the S&P 500 printed an inside bar here. And it's a doji candle and closed below the 10-week and also the 40-week moving average, and remain in this lower high and lower low pattern here. And I also have highlighted these 2 levels. So if the S&P 500 could get above this 4,200 area, essentially get above this level here, then that would break this lower high, lower low price pattern, and it could be the beginning of possibly a trend change. But if the price dip below this zone here and dip below the October low, then we could expect to see more downside in the coming year. Before we analyze the price action in more detail, let's first look at the market sentiment and the market internals. On this sentiment chart here, we see the S&P 500 got rejected from this trend line. Then it retreated a little bit over 7% before it kind of consolidated here. And right now, the VIX is still sitting at the low 20ish. And right now, the market participants seem to feel not too fearful. And also the put-call ratio, we're seeing this gyration between above 1 and below 1 on a daily basis here. And as I had stated in one of my earlier videos, ever since the daily OpEx of the S&P 500 and its derivative, we are seeing this put-call ratio being manipulated due to a lot of put and call option trying to do some hedging or whatever. Maybe the algo is playing some kind of new game. So we're not going to read too much into these high reading right now until the market sort of adjusted to the new games that the algo is playing. And from this market internal, we're seeing the up-down volume ratio has been pretty much neutral. And the S&P 500 been trading in this 70-point range. Thursday rally was accompanied by a little bit stronger buying pressure with a 9.5 to 1 in favor of the up volume. But the previous day on the sell-off on Wednesday, we saw a 4.4 to 1 in favor of the downside. And also in the daily advance and decline, we're seeing bond market participation on the downside and on the upside, such as Wednesday and Thursday respectively. This indicates to me the market is really nervous on both sides of the tape. And the New York Stock Exchange new 52-week high and 52-week low is also very neutral. As you can see, it's only 24 more 52-week low than 52-week high on Friday. And at the present, the cumulative AD line from the New York Stock Exchange is pretty much behaving normally in sync with the S&P 500, and we see no divergence. And the Nasdaq 100 lost 67 points or 0.6% for the week, and we saw a huge buying pressure on Thursday from the unemployment report. There was an increase in jobless claim, and the market viewed that as positive and thinking that will cause the Fed to pivot from its rate hike policy. And the daily advance decline also showed bond market participation in the Thursday rally as well. For the Nasdaq new high, new low, the number of new 52-week lows still hovering around a few hundred on a daily basis, while the new 52-week high is sitting near 100 on a daily basis. The Nasdaq cumulative advance decline line is back to normal after the negative divergence was resolved by having the Nasdaq 100 close below its October closing low. Currently, there is no divergence. So what do all these sentiment and internals indicator are telling us? The VIX is telling us the market participants are still in the belief that the recent drop from the S&P 500 is only a normal pullback and not a beginning of a major correction. And the up-down volume and the daily advance decline are telling us the market participants are still showing a sign of FOMO, as we saw bond market participation and huge buying in a bad news is good news rally from Thursday unemployment report. And since the number of stock making new 52-week low is relatively constant, it could be just waiting for the next shoes to drop. Now let's analyze the price action of the indexes and see where they could be headed, starting with the S&P 500. The S&P 500 been trading in this range here, this between 3860 and 3800 for a couple of weeks now. And some might even call this as a bear flag here. And so right now, we basically are looking at this price action here to see will it be able to break out of this consolidation range. And looking here on Wednesday, it came down, actually came down to the lower range of the weekly expected move before it got a little bit of a bounce back up into this price zone and back into the range. So for the coming week, we'll be looking at this particular range here. The upper range of the expected move is between 39.40 and 39.24. And the lower range of the expected move is between 37.54.80 and 37.40. So we're basically looking at the possibility of the price action on the upside scenarios to break out of this consolidation pattern and move up into this zone here at this 3900.06. So if we could get above that 3900, then we probably could see a little bit more upside toward this upper range of the expected move. But I expect it to come up into this 3900 and get rejected back down to this zone here. So to this range. And for the downside is for it to come back down to this below this 3800 and into the lower range of the expected move, then possibly work down toward this pivot low here near 3698. Looking at the NASDAQ 100 chart here, as you can see on Wednesday, it came in to the lower range of the expected move, and also it closed below the October closing low here. And you see also on Friday, it printed a inside candle, a bullish inside candle. So let's switch over to the 4-hour chart here. And on this 4-hour chart, I have the upper range of the expected move between 11,320 to 11,249.50. And the lower range is between 10,630 to 10,570. So for the coming week, I would keep an eye on this potential scenario is for the price to come up to this 11,000 and try to backtest this zone here, and it get rejected back down and then come down to this lower range of the expected move and possibly work down toward the October low, and that would be the 10,435. And for the Russell 2000, it's been pretty much in this trading range here. So let's switch over to the 4-hour chart. And on this 4-hour chart of the Russell 2000, here's the scenario that I will be keeping an eye on for the coming week. Is for the price to try to break up above this trading range and into this 1780 zone here and get rejected back into the range and then come down to this 1700 area here on this pivot low. And if it could not hold this support level, then we'll be looking for a move down toward the October low here. And for the Dow Jones Transportation, the Dow Jones Transportation basically been hovering around this 13,500 area. So the scenario that I'll be watching for the coming week to see what the price to be making a move up toward this 13,750 area and then get rejected back down and move below these low here and come down for the 12,890 area. Essentially come down and dip below the 13,000 level and get down to this pivot low here. And for the Dow Jones Industrial, see that the Dow Jones Industrial appears to be making a little bit of an ascending triangle here. So for the coming week, I'd be watching to see will it try to break out of this ascending triangle on the upside and get a little bit of a false breakout, and then come back in and break this ascending triangle on the downside, and then work toward the 31,727, this pivot low here. And the New York Stock Exchange Composite Index has a similar type of a price pattern as the Dow Jones Industrial. Likewise, it has a ascending triangle here. So again, be looking for this to see what it come down and break it on the downside, get underneath this 15,000 level, and then move down toward this 14,297 area, this pivot low. Now let's take a look at the yield, the US dollar, oil, silver, and the gold market. On the 10-year yield chart here, we see the yield is back up above this 3.75%. The next level that I'll be watching will be the 4% and above. And my expectation is for the rate to come up and take out this 4.335%. And possibly seeing 5%, if not higher, in 2023, if the Fed is not having significant success in bringing down the inflation toward that 2% level. And for the US dollar, for the short term, I could see that it possibly could come up and get a bounce back up to this 105 area, but more likely it will come down to this 103 area here and possibly do a little bit of a back test of 103.50 and then come down to near this 100 century mark here. And looking at crude oil on this chart here, we can see that back in June, it made this 118 level back in June, and it dipped all the way down to recently to this $70 level. And right now it seems to be making its way back up possibly come and backtest this trend line here. So we'll see, will it be able to move up here and backtest this trend line and see if it's going to get rejected back down. And if it get rejected back down and come down, break below the 70 level once again, then I'd be looking the next level for oil at the $60 area. But if we could get above this 84 area and get back above this trend line, then look for another possible uptrend to move it up to try to get up to this 120 area. Silver been rejected from this low volume zone here, so I'm basically watching to see would it be able to break above that next week and do a little bit of a back test down to this 2450 area and then pushes up to this 2650 zone here. And for gold, gold is also encountered some resistance up near this 1833.80 or 1834 area. So for the coming week, I'll be watching to see will gold be able to break above this 1834 and try to make a push up toward this 1920 area. And if it is unable to break above this 1834 and get rejected from this zone, then I'd be looking at the possibility of coming back down and do a little bit of a back testing this 1760 level. So in summary, the S&P 500 closed in one of the worst years since 2008. There are still a lot of market participants hoping the Fed will pivot in 2023. Whenever the market receives a report showing the economy is slowing, the market take that as another catalyst that could cause the Fed to reverse its rate hike policy. And until these participants finally realize, no matter how weak the economy is, the Fed will not reverse its policy until it sees inflation have reached near the 2% level. And the S&P 500 will not put in a bottom until these wishful thinking market participants give up on the hope of a market rebound and capitulate. So be prepared for a more violent downside move in 2023 and watch the VIX to move up to the 40th level. Now, if you like this content in this video, be sure to smash that thumbs up and help me promote this video. Thank you for watching and stay safe.